We decided to commission this report given the high degree of mobile phone penetration in the world, yet the number of people who still don't have access to bank accounts. So there are well over 1 billion people in the world that have mobile phones but no bank accounts. Despite initial success in countries such as Kenya, Tanzania, and Philippines in driving scale, there are well over 90 deployments that have not achieved this scale. With that in mind, we worked with our partners in the public and private sector to try to build consensus as to what the key drivers of scale are, and then organize these drivers in terms of scorecards supported by data to see how countries are performing in each of these different areas. We created scorecards for 20 countries which pull together data related to the key drivers of scale in mobile finance. These are organized into 7 different pillars. These include the regulatory environment, looking at telco and financial services regulation. It looks at consumer protection, which is very important given that new consumers will be brought into the formal economy with mobile financial services. We look at market catalysts, so things like government disbursements through mobile, taxation through mobile. Competitiveness of the telco and financial services sectors is also very important, as it can drive innovation that will lead to the development of these services. Agent networks are also extremely important, as they provide cash in, cash out abilities and can also enroll new subscribers. And finally, measures of adoption and availability are included. So availability being the ability of end users to access all these different services, and adoption being just how actively they use them. The most basic measure of success in the development of mobile financial services is arguably adoption, the degree to which end users actually use the services. By this basic measure, we find a few countries that have done relatively well here. So Kenya, Tanzania, the Philippines have all achieved adoption well over 10% of their population. This has been confined primarily to mobile money transfer. And when we look at other key financial services such as savings notably, but also credit and insurance, we find that no countries have achieved any meaningful scale here. We do look at measures of what we would call readiness, or the degree to which countries have put in place those factors that will help build scale in these financial services. And here we find other countries besides the initial adopters that have actually done reasonably well. So for instance, Brazil has an extensive point-of-sale network for financial services, which, while not mobile-enabled, has contributed to a degree of credit information on consumers and more established consumer protection practices. India, as well, has a very competitive telecom sector and has put in place some regulations that may be enabling for mobile financial services in the long term. While it may be intuitive, we found that in those countries that had high initial adoption, there wasn't the availability of traditional financial services. So customers were more likely to overcome inertia in using this new form of financial services through mobile. That finding is also relevant in that countries that do have alternatives may be able to leverage some of those strengths in helping build out mobile financial services, countries such as Brazil, as mentioned previously. Another important finding is that data and collection would seem to be extremely important in rolling out mobile financial services. So countries that didn't do as well across the drivers that we've captured, they also didn't have very good availability of data in many areas. So in order to support the very fluid sort of test and learn environment that may be important to building these services out, data and collection to create evidence and better monitoring will be extremely important.